Welcome to another day in the Matrix. This is Red Pill Podcast number 98. I hope you're all having a beautiful weekend. Today is Sunday, February 12th. We do have the Super Bowl later. We're not going to be getting too much into that today because I already did a full decode on it and I shared all my thoughts in my last Red Pill as well as my last YouTube video. So definitely go check that out if you're interested in that information. We're going to be back to a more traditional Red Pill podcast this time. Going to definitely be going over a lot of the key numbers and date connections to this week. Definitely having one date stand out to me, so I'm excited to share that with you guys and then have any fellow decoders share their thoughts in the comments. But I hope you're all doing amazing. Get comfortable, get relaxed, grab yourself a cup of coffee or tea if it's the morning, or a glass of wine or a beer or any beverage of your choice if it's the nighttime. It has been a really interesting week in crypto. We have been talking for a while about a short-term pullback somewhere to around 21,500 for Bitcoin, and we actually saw Bitcoin come down perfectly to $21,460. So really amazing to watch that back test. It hit into this wick high that led to a further sell-off into November, and that back test is very crucial. Then over the past couple days, we've had a couple of green candles, a little bit of what looks like a bounce, but we can't confirm that just yet because it's Sunday morning. Crypto is trading alone. We still have the stock market to open up tomorrow. We have later today the CME, Chicago Mercantile Exchange, precious metals, and the Dow Jones. It's going to be an interesting weekly close for the crypto market, especially with this Super Bowl being a part of it. I think I brought up in the last Red Pill that this Super Bowl specifically will have no crypto advertisements. They're banned. So I'm not entirely sure if that's going to make much of a difference in the price action comparatively to the last Super Bowl. I assume it will. But overall, we did get the technical pullback that we were looking for. I also brought up in my last YouTube video how there was a CME gap somewhere around 20,000 flat. It's a very key psychological level of 20K. And I sort of created this theory that maybe we just come down to the 21.5. We disregard that CME gap for now. We have a couple of days going sideways, and into March, we march on up to the next level of our automatic rally. And we come back to fill this CME gap at 20K later in the year, perhaps into the October eclipse. So that's one scenario. And of course, we have another scenario, which is just randomly chopping down really quickly to about 20, probably have a big wick on the downside, getting sucked back up, and then continuing after that. So we have a couple things to get into today. I did tell everyone over on Discord that I was planning to start on my last Red Pill podcast, that I was planning to accumulate if Bitcoin got down to my technical target of around 21K, and it did. It hit right on my numbers that I was looking for. So I decided to take action and reaccumulate some positions. I had a very lengthy write-up before I shared the exact details of what I bought, my buying targets, and the percentages of my portfolio. But I just wanted to let everyone know that I got into this market when Bitcoin was 8,000, when ETH was 400. And, I was taking profits on those back when Bitcoin was 60K and when ETH was above 4,000. I bought my XRP on average below 18 cents, and then I sold a lot of it over $1. Even about probably 45 to 50% of all my XRP was sold over $1.50. So for me, I am at a different place than a lot of other people, and I just wanted to let people know that that's why I waited until this moment. That's why I waited till I got a bullish confirmation, something that broke us out, gave us some energy, and then having some key backtests, technical backtests. As a technical analyst, it just confirms a lot for me, and it allows me to be more confident in my moves. So I'm conservative because I have a ledger that has, these OG buy orders, and I've already taken advantage of the last cycle. Now we're here in this automatic rally phase, which I believe will continue up, and I'm just playing the automatic rally at this time. So I was very candid that whatever accumulation I make now, it is to be in this automatic rally confidently and to de-risk this automatic rally confidently. And if I have any old positions, stuff that's been lingering around that I do not see deem a sophisticated hold for the long term, that's when I'm going to be unleashing those orders and getting rid of that stuff. So I know a lot of frequently asked questions come up about me and my perspective on this market. Well, I'm just playing the cycle, guys. I feel like before we get to the Bitcoin halving, we're in a very precarious spot at this time. We are unregulated for the most part. We're watching exchanges drop like flies. We see what happened with Terra Luna and with FTT, which we called those eclipses to be a big part of those rituals. And we are approaching some eclipses very soon. We have that 420 eclipse and the 5/5 eclipse right around the corner. This is just not a time to be playing around with this particular asset class. It's a very volatile asset class, and I just want you all to be safe, conservative, and be wolves amongst the bulls and bears. So I know what I'm doing. I'm trading these moons, and I'm getting out of this market with a sufficient amount of capital into these eclipses of April and May, so that I could rebuild my entire portfolio and that I could actually try to just see how this market comes down into the fall time, see where I could, take action accordingly, not get too caught up in the fluff and the theater and the narratives that are going to be pushed at that time, just to be in my own analysis, very, very focused, trading my plan. It's a big part to my overall teachings is to just, we need to have the skills to develop our own investment thesis, our own plan, and then when the time comes, you need to trade that plan instead of waiting around for other people to tell you what to do. So anyone who has my crypto mastermind or my advanced trading course or any of the courses that I sell, you know that it's my goal for you to become self-reliant. So now that we've watched a lot of these moves play out, I've been getting the same questions over and over again is, how do I design my portfolio? How do I learn TA? How do I do this? And it's all covered in my crypto mastermind course. So if any of you are listening to this and it's intriguing to you and you don't have that course, it is heavily discounted for you. You get the best discount available on the crypto mastermind. It's right here in the description of this video over on Patreon. You can take advantage of that if you want. It'll be the lowest price ever. I never plan on increasing the price on those particular courses as of now. So definitely something to take advantage of, especially while we're just a couple months away from April and May eclipses. It gives you a sufficient amount of time to get through the intro material at least. And then, of course, we have these podcasts coming out every week, and I'm sharing my buying and selling. I just don't want anyone to be reliant on me telling you when I'm selling and when I'm buying. I'm trying to do it in a way that still builds your skills, and it's not me just handing you the keys. I kind of want to teach you how to fish, if you will, as the old saying goes. So we're here. We're watching this market just range. It's been range bound. We've seen a couple of isolated altcoins do some very wonky things. We're getting into one of those today that I have not talked about probably in 2 or 3 months. So we'll be covering that. I think we have about 4 to 5 alts. So let's get straight into the dates. But very quickly, you guys might have seen over on my Twitter account, I released this video. I'll quickly show you. You're probably all aware by now of the Twitter that I have. If you're interested in following some of those, updates that are random. And it was this post right here. So I was saying, why do you think Bitcoin keeps getting rejections at the level that it was getting rejected at? And then I shared this chart and I shared this trend line. Okay, and it's right there. Now, if we go to this chart, you could zoom in and you could see it's this trend line that was shown in the video. And then during a podcast, I made this support line and I said, well, I'm still waiting for this 21.5 back test. We've gotten it. And now we've definitely can confirm that this is a very powerful trend line. So that was the point of this. So yeah, over on Twitter, I'm going to be sharing stuff that I feel has value, not just keyboard warrior nonsense. Let's get to the dates. Also, I want to share love and gratitude for everyone. We had an amazing live stream yesterday, pretty much broke the record of the most viewers at once. We almost got to 700 people. I appreciate all your support. It was a very last minute podcast. So I just want you all to know, much love, really appreciate it. It's just beautiful to see what we're doing here. Really, seriously amazing to watch the engagement. And well, when the mosquitoes come around, they don't last too long. We've built a very resilient, system over there in our live streams, and it's just amazing. I really look forward to them. It's my favorite day of the week. So, as I brought up earlier, we have Super Bowl Sunday. That's that's today, and then we have. Oh, by the way, the Super Bowl is between 6:30 p.m. Eastern time to 10 p.m. So any of you astrologers out there, if you want to dive deeper into your charts and see what's going on, shout out to Rebecca Carrington or Red Queen Tarot. She was really sharing it hour by hour and giving it a breakdown. And I overlooked what she wrote after I made my decode. And I agree with this is probably going to be a close game. And then there's probably just going to be a final moment where the Chiefs come back and take it. Again, I'm willing to be wrong. I really don't care at all because I'm not betting. I'm not gambling on this. I'm a decoder. And the decode that I shared was mind-blowing. I mean, if you just remove the idea that I settled on the Chiefs, the decode itself is profound, and it connects to so many things, back to the formation of Skull and Bones, the Trail of Tears, Indian Removal Act. I mean, you name it. That big connection with Doug Williams was insane. So, I'm looking at it through the lenses of a decoder. I'm not really here to make predictions. They're fun. They're a fun thing to play around with. If the Chiefs win, great. But I have no prana invested in this game. I am just going to take whatever happens and the code that I've already been accumulating from my Year of the Rabbit decoded and the recent Super Bowl decoded. And I want to see the positive and negative effects that these numbers have on this year, correlated with the Chinese year, the Hebrew calendar, and the Gregorian system. And that just allows me to see how this is going to play into the market, which is ultimately what I'm focused on, is what to do with my portfolio in this crazy market and take advantage of it. Ultimately, this is all about making money. So let's move on to tomorrow, the 13th. This is an interesting date because when you connect it to April 20th, the eclipse, the solar eclipse, it's going to be 66 days. And you're going to see a couple moments here where we have this 66 showing up. The day before that eclipse would be a 66 date numerology. But 66 days out from the eclipse, starting Monday, the market will be open. It's the 13th day of this month. We have a 13 date numerology. So a couple things, but what I want to say about this specifically comes back to some older analysis that I shared, which is to the 28th of September of 2022 to today. So this is a 137-day span. This would be the day after Rosh Hashanah is completed and officially into the year of the Jubilee, or the Hebrew year 5783. That would be on September 28th of 2022. Connecting it to today, the Super Bowl, is 137 days. So this is the end of that Shemitah completely. That was the Shemitah cycle, by the way. Tomorrow would get us out of that window completely. So that's one of the big things that I've been bringing up, is the 13th of February. I brought it up from a more esoteric perspective. And then I guess a more exoteric perspective would be that it's the third quarter moon. And we're seeming to get our microcycle lows around first quarter and third quarter moons. I don't know why, but it's been like that lately since the eclipse that we had on November 8th, which was that FTT collapse. So I'm very open-minded that once we got out of that third moon and we pivot into this new moon, that we should see the continuation of what I'm calling the automatic rally. So a couple of confirmations here. We're out of that 137. And by the way, if you're unaware, 137 is the 33rd prime number. It's the number of transmutation. It's a very powerful number. Comes back to the vertebrae in our spine. Has to do with cerebral spinal fluid. I mean, you could go really deep into this. I'll be breaking this down more in the future, although many people have already. I've spoken on it. I will be talking about it in depth with lots of connections, maybe connections you never heard before, in my upcoming decoding mastermind, which I don't have a release date for yet. It'll probably be released at the end of the year, depending on what's going on in my life at that time. But that's going to be the craziest course that I ever release. It's going to be mind-blowing. I take notes on it day by day, and just, wow, some of the connections are are just so fascinating. But getting back to this 137 energy is out according to this code, and then considering this 420 to this 66 days, I see this as a pivot. One other note is this will be the 44th day of the year. So another power number to consider. And getting to the 14th, it completely moves us out of that energy of any power numbers. So no 44, no 66, no 137, coming back to the 33. By Tuesday, we're looking to be pivoting out of this so-called bearish, short-term bearish energy that we got from this recent pullback. We can't confirm that we're done with this energy until we start to break structure, which would be Bitcoin above 23,400 on a daily close. So we broke through this level, and we can't say that this is the absolute low thus far. That's why I was open-minded to the CME gap being on the downside. Also, guys, even though I said that we might have been done with this by just testing 21.4 and saving 20K backtest for the CME gap to a later part of the cycle, if I had it my way, I would rather us just flush through 20K now. That's just, remember, the market doesn't do what Jordan wants. It doesn't do what Chief Wolf wants. It does not. That's why I don't talk that way. I save that stuff for later on, just for play. But if I could have this market come down to 20 now, I would just secure all my final accumulations and send it. Because if that was to happen, that would give a little bit more confidence that after we head up to an automatic rally and come down, we might come down and trade on the heart line that I have drawn right here, which is this is our microcycle top that we've yet to break. This move right here was just another lower high. No trend reversal yet. We have high, lower high, lower high. We have a low, seemingly higher low, but as long as we're still lower than this high in the structure, we have yet to confirm a reversal. So in order to know that our automatic rally is really game on, we need to see Bitcoin trade over 25. So I would love to see 20 hit now, or maybe 19.8, and then shoot up above 25. To me, that would be amazing. That would be much healthier. I know that doesn't sound healthy because everyone becomes really like perma bulls once the market moves up, but that's not the way I look at this market. I don't perceive it that way. If we were to just come up now, maybe hit 40, roll over, go back to 20, that would still be a lot of opportunity. But I guarantee you, if the market went in that way, we're going to see these altcoins take a massive dump. Okay? It would be better while the market is up a little bit now. These altcoins have had a little bit of the Bitcoin dominance flooded into them. It would actually be better for us to go down to 20. It would look stronger for the alts at this stage, and then a bounce for Bitcoin, take back some of that dominance, and then continue on. So that's why I'm keeping the 13th and the 14th in mind, because we have some of these big power numbers. We have this 66, we have this 44. I showed you the 137 connected to 33, and then out of this into the 14th, we're moving out of this third quarter moon. We're essentially still in it, but we're moving out of it. Hope that makes sense. Now, this upcoming Friday is what I wanted to talk about. Okay, this upcoming Friday, the 17th, is a pretty interesting date. Let me show you. So speaking of a big power number, when you connect this Friday to Friday, May 5th, the 5-5 date, so we have 5-5, you can see that right there, connected to this Friday is 77 days. But I'm seeing a repeating pattern here. And one other thing to mention is this is 3 days before the new moon and about, 8 days past the full moon. So when you start getting past 5 days of the cycle, it's still within energy, but it's as it approaches closer within the 5 days of the next cycle of the new moon, we start the recovery. So just a quick reminder, we have microcycle lows around full moons. We've been more likely getting the exact lows on third quarter and first quarter. But then as we get through full moons, we go up into new moons, etc., vice versa, over and over and over again. And you got to consider the eclipses with this. And because we don't have an eclipse until April, we just have to keep that in mind. It's not going to be as dramatic when we're looking at these microcycle lows and highs to moon cycles. If we do have an eclipse as part of this conversation, or a solar or lunar phase as part of this, then it adds extra oomph. I almost feel like I should make a full video on this. You know what? I'll wait until May 5th is over, so we're done with the eclipses, just so I could look at all the solar and lunar cycles comparatively to all the moon cycles, the smaller cycles, the 13 per year. Then look at the eclipses and how it plays its role within the solar or lunar cycles. I know this sounds complex, super probably confusing for some people, but if I made a video on that, it would be like the most comprehensive way of us showing the crystal ball of Bitcoin's price action, especially if you threw in the halvings, which I think the people who created Bitcoin were astrologers and astronomers. They were just people who knew the code. They created it according to that code, which comes back to mythology, which is why I focus on that so much. I'm just going to take a sip of coffee real quick. Okay. So getting back to this date of the 17th, it will be the 17th day of this month. We have a 17 standard date numerology. We're connecting it to this eclipse with a 17 standard date numerology. They have the same date numerology. And this, for me, is tied 77 days. We know those sevens are very important, right? And what is 17? It's the 7th prime number. So we have a lot of sevens going on right here, guys. We're also in the 2-2-3 year. 2 plus 2 plus 3 equals 7, right? Now, another amazing thing is this leaves 317 days left in the year, and 317 is the 66th prime number. Remember we were talking about 66 earlier? Well, Chinese New Year, if you go to the 122 date, was a 66 date numerology. 6 plus 6 equals 12. So anytime you're getting those sixes, that comes back to the word rabbit, which we've been focusing on a lot this year because we're in the year of the rabbit. But just to point out, this 317 being that 66, and we were just talking about how tomorrow is 66 days until the 420 eclipse. Let me just show you that really quickly if you don't remember. Oh, I don't know why that was turned to 2025. It doesn't really matter though. But tomorrow being the 13th, and we could see that 66 days until the eclipse. So how amazing is that we have this connection to Friday with that 66 coming back to the 317 down here, 317 being the 66th prime number. Definitely important, guys, when we have all these connections in these multiple 17s, 17 being the 7th prime number. This is connected by 77 days. And lastly, this will be the 7th week of the year. So starting tomorrow, we enter the 7th week of the year, and the 17th is within that week. So the 7th week, we got all these sevens because of the 17 and then, those 77s. So I think this is really interesting. I would love to know some more of your thoughts. If any of you out there have more to add about February 17th or just this week, feel free to share it in our Discord. We love the collaboration. It's great when you guys have information to share regarding these connections that I'm finding, especially for those astrologers out there that are going deep into the astrology charts. You're going to be able to add more information. And I almost feel that whatever the result is from this Super Bowl today is going to help us dial in even more of what this date could bring us. One last thing, and then I'll move into the TA. We have like a lot of activity going on in our Discord talking about this chat GPT thing. And people keep wanting to know my thoughts. I mean, I already talked about it in my last live stream, so you could go tune into that if you like. I keep seeing people talking about this thing Dan and how it's predicting a market crash on the 15th. I think what is this? Can you guys maybe give me, remember, I'm Patrick Starr. I'm living under a rock. Can you guys explain to me what's going on here with this? And why are people giving it so much of their juice? What's going on? Is this going to be another tool where it just gets people further and further away from learning TA and learning decoding and learning how to actually develop a skill? That's kind of what this feels like. No offense, I'm not trying to offend anyone. I'm ignorant right now to what this is, because I'm just the type of person that I would never mess with this stuff to begin with. I have no desire. I wake up every day, put in 14 hours on skills. I have no desire to be messing around with these AI programs. I just don't. I'm not against people who want to use them. Have fun in the playground. But it seems to me like another layer of something that takes people away from creating personally, like exercising their creative essence. And simultaneously, if we're using this thing to determine market action, well, then people are just never going to want to learn skills anymore. I really feel that seems to be like we're at the cutting edge. We're at the cusp of humans giving up on wanting to learn. We're just going to do everything through typing in a search result. That's all we want. When we want to know a fact, we go to Google, type in a search result. When we want to have a picture generated, we just go to some AI thing and we type in a sentence and there we go. Nobody wants to put the pen to paper anymore. No one wants to put the paintbrush to the canvas anymore. What's going on, man? Are we done as a society trying to I'm just saying. I'm just saying, you know, like what are we? I don't want to hear anyone complaining anymore about the NWO. Stop it. If we're going to keep feeding into this stuff, keep your lips shut. All right, let's move on. But yeah, tell me what this is all about. Tell me what Dan is. Tell me what ChatGPT is. Tell me what the market crash on the 15th comes from. I'm having people from every corner of the world running, like emailing me, sending me Twitter messages. I'm just like, dude, come on now, man. Come on, meow. Let's say I'm gonna drink some more coffee. I need coffee for this live stream, especially if I'm gonna get spicy like this. Okay, so we need to look at the 2-week. We're looking at the bi-weekly chart right now, family. This is important because we have a bi-weekly close coming in, and this candle structure is not looking amazing. We have two big juicy greens and then a big red, and that closes tonight, right after we're going to close while the Super Bowl is still happening, all right? And we're still at a lower high. So our high right there in the structure perfectly rejected off that wick, which came in here. And then we can see that we've just made another lower high around 24K. This isn't like a bad candle necessarily. It's just it's pretty girthy. Down 7%. We know that this move up was dramatic and completely unnecessary, but that's the way Bitcoin is. This move right here, I was telling you that I was seeing it akin to this move. So we would have some sort of green structure, a little bit of a red, and then we would just start moving up again. Pay attention to that because I think we're in a similar part of the cycle, somewhere right there. I was saying around April of 2019. I was looking at two parts of the screen at once. I almost went cross-eyed. Okay, so bi-weekly close, it is what it is. Let's pull up some indicators though. Okay, so you can see clearly this 200 exponential, it's flatlining and it played a nice support. We did trade below it for a little bit and got rejected, but we got right back above it. So this 200 exponential is pretty key. I know it was a back test on the C19 crash. And thus far, we're losing our volatility as the cycles continue. And we don't have a lot of data on this, by the way. This data formed going back to 2017. So if we were looking at like a stock that started trading back in the 80s or something, this would have a lot more merit, but it's hard right now. So little data. One thing I do like is this 200 simple moving average is still sloping up. We can see the 8 simple has started to slope up. Let me turn these off and let's look at what's going on with the EMAs. Oh, okay. So this is nice. We are trading on the 13 exponential, but we got rejected by the 21. So I brought this up before. If we start getting bi-weekly closes above the 21 exponential, that'd be great. But ideally, you'd want to have it above this 34. And then you get all of these into a bullish posture and then send it. And you look back here to the time that we went into a bullish posture with this. You really didn't want to wait until that moment, but still, it was okay. I just want you to see right here, looks like right here. Okay, look. We came up, we got rejected by the 34, we tried holding the 21, we successfully did, and then after that, blast off. So now we're working with much more market cap, less volatile. So what we are comparing this to, damn, this looks so fucking similar. Look, we are right there on the orange line here, right there on the orange line. It's crazy how similar these cycles are. So yeah, for me, that's why I'm not waiting. I don't care about catching the bottom. That's not how it works. The bottom is a year to 2 years, sometimes 3-year long process, depending on what you're looking at. You know, if we're talking about XRP has been in a bottom for like 5 years. I'm not throwing shade or talking shit about it. It's just it's been in an accumulation cycle for a long time. That's why it's smart to accumulate it whenever it's undervalued. Because once it starts dropping to some of those lower targets, I mean, it's like it gives you so much opportunity. You just wouldn't want to not sell it when it goes up. That's the biggest problem that XRP investors have, is they just never want to sell the thing. Even if they're up 200%, they just never want to let it go. And anyone who follows my channel, you know that we take advantage of those moments, especially on XRP. Out of all tokens, we need to get to 2024 family. We need to get to that big Jupiter year where there's positive influence on Jupiter. When the Jupiterian influence is positive. This is my feelings, by the way. I feel like once we get past the summer of 2024, specifically past the Summer Olympics, it will be an interesting time, but I don't want to get ahead of myself. Let's move on. We're at the 2 week right now. This is fine. It's mimicking identical to the past cycle, getting around this 21 exponential on the 2 week chart. Let's get to the weekly. All right. So this is looking nice. We got above the 34 exponential, but we're now looking like we're about to close below it. So that's not looking good. Just consider, though, that Bitcoin, when it makes big volatile moves like this, it tends to chop back. And we could see that the 13 and the 21 are right there at 20K, 20,300, 20,400. So if we were to close below this 34 on the weekly, that could be a sign for like a quick wick to the downside. Fill that up. Now, when I'm done with this podcast, I'm going to put in some limit orders because I feel like that, to me, would be a very sensible move, because this shit could happen in moments. We could see Bitcoin. I'll show you on a daily chart. Okay, you see this wick right there? You see that wick? You see that wick? This wick? These wicks could happen fast, all right? So don't try to do this all manually. I taught everyone in the exit strategy blueprint and in my in all my other work, like, you need to have these limit orders set up. You need to. It's so important. So this weekly, having those two levels there at a little bit above 20,000, what that could mean is if we close below this 34, that would not be the greatest sign. It would show weakness, at least, especially because we're just in lower highs and ultimately a downtrend. Closing below the 34 exponential could be a sign that we wick down into 20K, fill the CME, get back above the 21 exponential on the weekly, and then just bounce up. So this is a 7-day candle, guys, in crypto. You could have a 4-hour candle down to 20K and bought right back up to 22K in the next 4-hour candle. That's what crypto does. So I'm not saying that's what will happen. I'm saying that if you're somebody who's adamant about the thesis of an automatic rally continuing, well, then you want to take action in this game, not financial advice. Oh, lastly, we have the 3-day and the 5-day closing on the 14th of February. Valentine's Day, the day of Eros. Okay, so we're looking at the 3-day right now, and we're in bullish posture on the 3-day with the EMAs. We could see this blue is above the red. So we have 13 above the 21, above the 34. So on our 3-day candles, we're looking great. On our 5-day candles, we're getting close. So I suspect if we hold above the 20,000 area into the 14th of February, which we probably would, even if we were to come down real quick, I think we're looking solid right now. We're looking more bullish than bearish for sure. Well, I think it would make these moving averages all start to cross up each other. Especially this is a key one, the 13 crossing above the 34. So if we have that happen on the 5-day, that's really solid for the thesis of more continuation. Now on the 3-day, this is looking really good because not only are the blue is above the red, but we have some space in between them. So this is starting to really show itself that we're in the process of a recovery or a reversal. We have back tested the 13 moving average, with a sharp little wick. Let's see how this holds moving forward, because ideally that would be amazing if we could get down to that 20 area, like I said before, and then keep these in bullish posture where this 13 stays above the 21 above the 34. We're looking at the daily now, and the daily is showing us that the support is on the 34 exponential moving average, but the 13 and 21 have started to slope downwards. So keep that in mind. Downward slope is not necessarily the most bullish thing in the short term. We have the 8 simple starting to cross below the 13. Today's daily, we're probably going to have it start to close below the 21. Again, these are going to all start coiling together. I do like seeing this white moving average, the 55, crossing the 200 simple. That's a good sign because it's been a while since we've had that. Like a long time, like the September timeframe of 2021. Sheesh. All right, so having this white moving average, the 55 simple on the daily, cross above the 200 simple, that's a solid sign. Another sign, which is positive, is having this light green moving average, the 200 exponential, above the 200 simple. Now, what would be really nice is seeing this 55, this white moving average, get above this 200 as well, above the 200 exponential. That would be awesome on a daily chart, but we're going to take some time to get there because you can see this is a very large gap. What would be more likely is if we stall out, maybe if we were to backtest one of these levels. Another thing, if you see where the 55 is sitting at right now, it's exactly at 20,000. So on today's close, unless there's some really big negative event that happens before the weekly close, we're going to see this move up a little more into 20,200. And where does that align us with? The weekly, what were we talking about before? We were talking about, I think, the weekly levels. 1 second, family. Right there. So our weekly, these are all coiled up right there at 20,200. So pay attention. 20,200, 20,300. Now we're looking at the daily. Right there. That 55 is going to be right around 20,200 to 20,300. So let me put a line right there. Because I feel like that's too significant to disregard. Let me put it at the 222. Okay, so you see what I'm talking about visually now? This white moving average on today's close is going to get real damn close to this. And if we look at the weekly, we're going to see where this level comes into. It's right there, right with all those key moving averages. And that would fill the CME gap. I mean, I would love for that to happen right now, guys. I would love for that to happen. But this type of market that we're in right now is all about faking out retail. So it's popular to know about the CME gap. That's popular. Every YouTuber probably talks about it. So when the retail knows about it, the market maker doesn't want to make it happen. That's just part of their like fuckery that they do. Which is why I shared in my last YouTube video that I wouldn't be surprised if we just hit these levels of 21.5 and then bounced and maybe fill this up later. But now we're starting to see a lot of moving averages here. We just have to see how it plays. Now, another thing is it's part of my thesis that I'm not going to wait for shit to happen if we start getting past the 13th or 14th of February. I don't care to wait at this time because I really feel like we're getting close to moving up to 30K. Like we should probably be there by early March. I know that puts me on the spot, but I'm not trying to push a prediction here. I'm just saying, looking back at the 2019 automatic rally, it is so similar thus far, like where we are at compared to where we were. Let me just turn off these drawings. And look, we're right here. That's exactly what we're looking like now. And it only had a couple of days of doing this sideways shit before it just went right up again. The structure is just so similar. Like it's amazing. Let me look at since the day of this big green candle till break of the level. It's about 31 days. So, it's hard to tell because this shit just went up and then I would call it here because we have all this resistance. Oh, okay. So literally 2 days from today, the 14th, the day that the 3-day and the 5-day closes is the 31-day span. We're getting close, man. I think we're getting real close. I think by the new moon, we're going to be up. That's why I was adamant about the 13th, the February 13th date, which I called out, like 3 months ago about to consider that date specifically. Okay, so I've given enough of the downside targets. Now upside is if we were to get above 23.2, I could see us very quickly breaking into 24. And technically, any daily closes above 23,700 should be continuation to 25, retesting these wicks, and then blast off. On the downside, this 20,200 level would be pretty juicy, especially if we close below this 200 exponential moving average. So you see, we back test. It took us so long to test this green line, and we finally got to it, traded there for a couple days, got above it, and now we're back testing it, which is pretty healthy. But if we started to close below it, that would be a sign. The only thing to say is, you guys know Bitcoin, it could flush below this intraday, get right back above it in the same day. Let's get to ETH. I started accumulating some ETH. ETH has barely moved since my accumulation, so that's fine. Ooh, okay, we're looking at the daily right now. We could see a very key cross happening, which is the one I was talking about moments ago with Bitcoin. Okay, so Bitcoin already did this cross. You could see this white above the dark green. That's the 55 simple above the 200 simple. We're getting there. Today's close will cross it. Very, very bullish. Okay, but look at the level it's at. It's at 1440. So what does that tell me? If we were to come back a little bit, that would be a key level to look at. We could swipe below it, of course, if this wants to get dramatic, but I mean, 1400 should hold. And you see this wick right there before that little bounce? That's a key level to me. Very key. We held on it 3 closures before heading another leg down. That's perfect. So let me see where my drawings are. I'm going to move this. Oh my God, it's so perfect. Look at that. Look at that horizontal line I drew. Let me turn this off. Okay, I had this line drawn, I don't even know when, but look at what we're back testing. Wow, fucking amazing. All right, so you know that was clearly a very key level, but let me bring in that other level I was showing you guys. Do it right here. 14,444. The 444. Okay, so that's key level. Going to keep that in mind. And ETH didn't break structural highs. Let me turn everything off and show you what I'm talking about. Here's your structural high. You'd have to get above 2,042. We got to 1,700. Okay, we didn't even get above this high right here. So no trend reversal. Again, I told people, don't throw a party over this shit just yet. You got to wait till ETH really starts to break structure. We're just sideways in a range right now. Full moon came. We saw what happened. Now we're pulled back. We did actually wick a little bit lower than the structural low on this microstructure. You can see right there was the wick low, and you could see we actually did go a little bit lower. So it's a sign of weakness. You can see this is the daily level, pretty clear, around 1555. We came up, got rejected on it, and thus have been trading below it. So another sign of micro bearish potential. Could roll over, and that rollover target would be clear as day right there at 1440. Let me look at the bi-weekly and see what's up. All right, really nothing to see here. Bi-weekly is showing us that we're just holding on one of the key middle layers of the trading range. Ooh, rejections at this orange moving average is the 21. We like to be above the 21 on all macro charts. So being below it is the same thing that we're seeing with Bitcoin. The charts are very similar. Now let me turn off the drawing so you guys could see what's up. Okay, one at a time so I don't confuse people. Okay, we have this 8 crossing above the 200 simple. That's looking pretty good, but we're struggling to hold the 200 exponential, so that's not, it's like positive energy getting canceled out by that negative energy. And we're still below that 55 simple. So trading above that 55 simple would be ideal for continuation of the automatic rally. That's a weekly chart. Let me turn this off and look at this. Okay, so we have as well coiling up the 21 and the 13 right around 1450. So where was our target? 1444 right there. It's looking nice. If we close at this current level, we will see these shift up a little bit. So wicks into 1400 are still possible. And if that was to happen, like let's just say we were to trade here and just quickly go down to 14, that would only be a 9% pullback. That's nothing. That is nothing. This day right here was a 6% pullback, and that's not including the wick. This day right here, 7, not including the wick. That was a big correction, 17%. So yeah, ETH can do this like nothing. Right here, let's look at the wick. Just the wick was 8%. So we could have a moment like that, guys. I mean, it would be interesting. Imagine it happens on the 15th. And people think it's a market crash, but it's just a wick down to fill the level and it gets bought back up and all these people panic sell just right into the hands of the elite. The people who created that fucking AI program, by the way. It's like taking candy from a baby. I love it. Once you wake up, you know what's up. Okay, so I'm looking at the daily right now, and it's clear that this 34 exponential is a rejection level. It's been showing us some resistance. That's not looking great. If this 13 crosses below the 21, that's again not a great sign because it's starting to show you more of a bearish posture, or more of a neutral posture, I should say. Until we have the 13 fully cross below the 34, we can't really call it full bearish posture. But we know why this happened, guys. And I told you a while ago when we were seeing 95 RSI on the 12-hour, I was like, dude, this is toasted. All right. And it had to come back. It had to. And now we're here. A lot of people were assuming we were just going to keep blasting up to 30K. But that's not how this works. You know, there is a very important technical component to this all. No matter how many people want to say shit like TA doesn't work, or people say that TA works until it doesn't work. No, that's not it. Okay. If you're still saying that to yourself, it's because you don't know what you're talking about. All right. It's like saying the car works until the car runs out of gasoline. It's like, okay, well, that's the way the car works. You need some fucking gasoline in it. Like, it needs an oil change. The car works until it needs an oil change. Correct. It works until the transmission starts to get weird. Correct. So we just identify the problems, and the problems are through people analyzing and making mistakes. Humans make mistakes. Robots make mistakes. Okay? Just get better at coming up with a conservative approach so that if you make a mistake, you're not going to take extra losses. It's called risk management. So if you don't have risk management and you don't know TA, it's very easy for you to say that it works until it doesn't work. It's because you don't know what you're talking about. It would be like a random person trying to speak to a mechanic about how engines work. I'm a mechanic and you're coming in to get your oil change. Like, you just don't know. So save yourself from making statements like that, because you really don't. Like, you just don't know. And I know this might seem spicy and harsh for those people, but if you don't want to put in the work to learn a skill, then don't talk about the skill. And especially saying that it doesn't work. All TA is looking at past data and doing our best with pattern recognition to determine what is most likely to happen next off of that pattern recognition. Determining trend, determining macroeconomic climate, microeconomic climate, etc. You know, it's not magic. It's not witchcraft or wizardry. It is literally just being able to determine what is most likely to happen next and not getting so caught up in the it works or doesn't work thing, because that's a waste of time. All right, so downside target for me is looking clean at about 1440. Could dip into 14 if there was to be some more dramatic event. Lower than that at this time, I don't really know if I could confirm. Let me look at the ETH CME. Oh my God, look at that. Look at the fill. It would be at 1466. That's right there. Okay, that's beautiful. That would fill the CME out. If we came down to 1440, beautiful. Okay. Pretty big confirmation there. All right, let's look at XRP. XRP is starting to have some weakness showing right here with this 21 getting crossed by the 13 and the 13, 21, 34 on the daily all coiling together. As well, we're trading below this 38.8 horizontal trend line that I had, which was more of a heart line. If I hide everything, you'll see what I'm talking about. So you can see this was like a heart line of the trading range. We definitely like to play around in this area, and we closed below it, and this weekend has been weak for XRP. That's okay. I shared pullback targets to 37, and if we're going to dip a little bit lower, the outside of this trend line is a possibility, but that would be a pretty dramatic drop. It's within range though, like a typical pullback. If ETH can move 9% down, XRP can move 9% down, and then the wicks are dramatic on this coin, of course. So it'd be nothing weird. That's a little more dramatic though. I mean, I think this is going to hold for the most part. It's going to hold structure, probably maybe come down to 35 cents. Let's look at the bi-weekly if there's anything I could say. This is starting to look like a head and shoulders. Yeah, in the short term. I wouldn't even care about that. This, to me, I'm more focused on this big W potential where the neckline is right here. And I talked about that before, how that W brings us into like the golden pocket around this, the $1.30 target. Weekly is not looking that strong. Could potentially be closing below the 13 on the weekly. Oof. Okay, we got the 8 holding us up a little bit, but really thin air below that. So yeah, 35 cents would make sense on a pullback, and then getting above this 34 is very important for XRP on a recovery. Now, one of the things we're seeing is this 55 is crossed below both 200s. So anything above 51 cents would be key to see continuation for XRP. 51 to 55, getting above these key moving averages. Okay, so not much to say, guys, on this asset just because it hasn't moved much at all. It's been trapped in the same horizontal trading range. We're continuing to see lower highs, not really able to confirm a trend reversal until we get above 55. Gotten rejected off this 200 exponential. Now we're getting held up by this 55. So I could quickly say a couple things. This is just tightening up in a range. Let's get the Bollinger Bands. Got the top side band sitting around 42, so that's pretty much in alignment with the recent highs that we got back in the beginning of the year, January 23rd. Yep, so we're just sandwiched between the 200 and the 55, and closing below the 55 would be, for me, a condition to drop to 35. Somewhere around 30, maybe just 36, actually. Probably 36, but you know how this goes. Wicks into 35 are definitely possible. All right, so let's move on to some of our alts. First one coming up is Quant. We've went over this sort of recently. What's going on? Drink some coffee. Okay, so Quant. All right. Oh, no. Yeah, this is lower high. If we can't hold this 0.5 fib. Okay, so we have a fib pulled, a really long-term fib from this swing high to this swing low. We can see we already hit the golden pocket, guys. We already hit the 702. I called this out a while back as well. Like when you see these moves from, I'll just show you, buying climax, selling climax, you could confirm that because you have a 90% loss. Then up here, you have a recovery phase perfectly into the golden pocket with wick rejections that look like a blow off top. Looks like the Empire State Building. That's not a sign that we'll have more continuation. That's kind of exhausted. So look at the recovery on this, 470%. That's about what we see on a automatic rally. This could go up again, but it would require, probably Bitcoin and ETH to have breakouts. So anyways, let me shut all that off and just look at what's going on in the short term. We do have a W potential right here that I'm quickly identifying. We have this W and we have a neckline right here. This neckline is perfectly at the 0.5 fib. We've gotten slightly above it. We're back testing it. So let me look at the measured move. I like to do my measured move in linear chart. We're going to do an extreme, like from wick high to wick low. We're going to place this on the wick high. And we're looking at about 172 thus far. The high has been 162. So that's still below the 382 fib, and that's still below this current high in the structure. No higher highs. Okay, so whatever this W pans out to be, we're back testing the neckline, which would be healthy. But if we started to close below this 0.5 fib, I don't know how great that would look. If Bitcoin's going to have a short-term pullback to 20,000 or something like 20,500, I suspect we'll probably see Quant getting back into the 115 range. And that would look okay because it would just be higher lows in the very micro structure. I don't think we'll be seeing below 87 on this asset for a while. It's highly unlikely. This chart looks awesome, by the way. Awesome. It looks really great, but I don't have confidence. Like I wouldn't personally put money in it because it's already reached its automatic rally target. So I don't look at shit that's overvalued. And it didn't give you much time to buy these extreme lows. In a week, 1 week, if you want to call it a month, maybe. No, not even. It only gave you a little bit of time to buy this low, 30 days, 1 month to accumulate. And then off of the average of that, let's put it around $60. It's a 200% gain on average if you were to take out profits. And let's just say you built positions around there and you got up to the 786 on one more rally up. It's about 300%. Okay. What did Bitcoin do from the 2019 lows to the 2019 highs? 300%. So it's just what I've taught you guys. We tend to see alts during an automatic rally have much more similar moves to Bitcoin than not, because we don't have alt season then. Now, again, I'm going to hear people saying, well, Jordan, you know, there's like AI tokens and there's this and there's that. It's like, okay, there's going to be isolated events. You want to isolate an event in crypto? Let's talk about Bitcoin going from a fraction of a penny to $70,000. Has anything else done that? Right? So you got to think holistically, you know. I'm just saying, for the most part, things like this are signals to me to not get invested, to not get excited, because it's already done what it needed to do. And I would rather it come down to below 70 again, below this 236, for me to even give it a chance of reaccumulation. But I'm going to personally hold off on this at this time. Another thing I don't like is how limited the chart data is. We only have a couple years of chart data. So I'm not confident, but I understand that this is an ISO compliant token, ISO 2022. That's obviously a good sign. It did really well thus far. Chart looks pretty good, just not a lot of data. So if this is the end of the automatic rally and we keel over, break below this 100 eventually, maybe in mid-May, we're going to probably start heading back to 40 again. And you don't even know. This thing could head back below that structural low, depending on how the eclipse of October goes. So if I was holding onto this thing right now, I would be more in my de-risking mindset than my accumulation mindset. Hope that makes sense, guys. And as for the TA on this, it's really just a range between this 618 and this 382. If Bitcoin wants to keel over a little bit, I think we could probably hit 115 for the short term, maybe hold at 103. And then on the upside, we see that measured move only brings us to about the high 190s, slightly below this high in the structure. I guess if Bitcoin wants to head into 40K, it would make sense that this thing would start to get into the top of the golden pocket, maybe 250. Who knows how this will go. And by the way, I said the chart looks really good. So just because I'm not interested in investing in it, it's just because I don't like the way it's so high right now for the things that I'm more focused on. Things that are undervalued is what I'm putting in my portfolio. Okay, next is AGIX Singularity Net. All right. Okay, so what's wrong here? Can we get a 1, 2, 3 double top? Amen. Ugh, okay. So I get why people are excited about this. What is this, 1,000%? Yeah, 1,500% straight line breakout. I'm sure people did not take advantage of this, and now they want to focus on something that's high. And this, blow off toppy, right at the top. Yo, remember we were talking about 66? This high is 66 cents. Oh, is this exactly 666? Get the fuck out of here. Sorry. It's just, yo, the high. Pause. I'll tell you when to pause, and just look here where it says H. 666. Let's look at this on CMC. Oh my God. Somebody in the comments section of one of my videos said Jordan doesn't know anything about altcoins. That's why he didn't know about Singularity. They're talking mess. I love when people give me that energy. Oh, what's this about? The 186. Oh yeah, there's probably no charts that go back to then. Okay. Well, that alt season high hit 666. And we recently literally hit 666. With a harsh rejection. So, okay, I'm going to teach you the TA on this. We have the 786 up here, somewhere around 34 cents. We're probably going to quickly, oh, it did. Look, it went straight from the top down to the golden pocket in a day. That to me is not healthy. That's a big rejection. That's a 45% rejection just off the top. Now, the thing that's weird about this is we closed one single day above this 888 fib, and that's not confident for me. If we're going to see like multiple days closing above this 888, that's actually a signal for us to go into price discovery. So that would be more continuation to the upside. And given this price did get above 66 at one point, it's allegedly an all-time high of $1.86, I think. Excuse me. Where is it? Okay, right here, $1.86. Because it's gotten there, this thing could go up to new all-time highs with Bitcoin going up. Sorry, not new all-time highs. I'm sorry. I'm just confused right now because this chart doesn't have the data, a sufficient amount of data. I couldn't find one, sadly. But the next target to come down to would probably be the 702. And if Bitcoin was to have a short-term move down to like 21,000, we could totally see that. A quick move to 27 cents and even as low as 21 cents. And that would really look like a blow off top to me. So whoever doesn't have this project, you missed the boat. Don't even pay attention to it. This happens all the time in crypto where you have an isolated project that just shoots up in a straight line. Because I'm ignorant to the exact reason why this happened, maybe you guys could let me know. Was there some sort of update? Was there something that happened that facilitated this dramatic move? You guys know big dramatic moves like this tend to come right back down. So I don't like looking at stuff while it's up, especially this up. And it's one out of what, 20,000 altcoins. So there's plenty of opportunity out there. There's 22,500 altcoins. This coin did a big move. Yippee yay. I've covered this before. I've given the TA on it. And the TA that I share all the time is that if we get into the golden pocket, you know, that's about the time to start considering de-risking. When this thing got into the golden pocket, it traded a little bit of time around it, and then it just shot up in a straight line. This is very unpredictable market action. To see a 250% move in 5 days, it's very sporadic, and that's why we can see it come back down in the same amount of time. It wouldn't even surprise me if it did, because look at this chart. This is a shit coin. I'll say it again. Look at this. It looks like a lie detector test. This is a shit coin. So shit coins do this. They're not doing it because they're solid, you know, like amazing. And I'm not calling AGIX as a project, as a technology garbage. It could be used at whatever capacity. I know that it is, but the movement of the chart does not make me look like this. It sure as hell doesn't look like this. This is a much healthier looking chart. Look at Binance. To me, the Binance chart is a much healthier looking chart. Horizontal trading range that's been going on for 700 days. This thing, what did it lose? 99% of its value? Okay, we lost 95% value on this thing, and then yes, it shot up in a straight line within a couple weeks. That's not healthy. That's not a sophisticated move. So I would not be paying attention to this. I'm just speaking this way right now because I'm sure a lot of people are just starting to pay attention to this at this range, and that's not the way to go. You really don't want to be doing that. Okay, let's move on to Illuvium. Oh, wait 1 second, guys. All right, sorry about that, family. So we're getting into Illuvium, and I just have somebody coming in the house. I have to deal with that for a moment, but I can't pause this. I have to finish because I'm over an hour. But we're looking at this chart right now, and this is Illuvium. I believe I have covered this in the past. This is a really, really dramatic push down. We're at 98% losses, so I would confirm this as a selling climax for sure. And now we're going to look at what could be the potential automatic rally targets. Ooh, okay, so look at this. We've watched, let me make sure this is properly set up with the fib. Exactly, okay. We shot straight up to the 236 but got rejected. So I just want to let you know that we need to get above the 236 in order to see positive market action into this golden pocket. Because this had such a dramatic pullback, anything from these lows up to this 0.5 fib area is looking pretty solid, you know, and that would be a horizontal trading range that we tried to hold for about what, couple weeks? Yeah, about 1 month before we just tanked through it. I would say that that's a plausible target to consider, somewhere around the 0.5 fib. That's what ETH did in the last market crash of 2018 into 2019. It lost about 95% of its value, and then it came up into the 0.5 fib with a perfect rejection. So we have a couple things to consider here. We have that technical level of the 0.5 fib, as well as a little bit of horizontal trading here, and that's a really dramatic move up anyways, about 500%. So here we broke structural high going back to October, but we still have a lot to work through. And this is another shitcoin chart. It looks horrendous, just jagged, sharp, move down over and over and over again. Again, not talking shit about Illuvium. It's just it's a shitty chart. Very little data, and it's hard to do TA on this stuff. So all I'm trying my best right now is to say that this is extremely oversold. It has experienced a selling climax. There is an opportunity and potential that if Bitcoin was to roll over to 21K, perhaps we come down to $60, and then you have an opportunity that's about 340%. Again, no different than what we typically see with Bitcoin or ETH on an automatic rally, about 300%. I personally, I would not be interested in getting this, but if you're someone who has accumulated below that $60 level and you've got in here, then you know you have some de-risking targets to consider. And then anything closing below 70, I would look to $50 to $60 as an accumulation range. That's probably as low as it'll get at this time. And this is a really clean W right here that had its move. This is the finality of that W. Right now, we're just building structure. I really have nothing more to say about this just because of how limited the data is. But knowing that upside potential of $270 is helpful. The chart's just too disgusting for me to ever consider investing in it. Okay, the last thing, kind of funny. This thing is called Pancake Swap. I think I looked at this coin a year ago or so. 1 second. This is, these big wicks just skew everything and make it annoying. All right. I'm going to try to do some TA on this. Okay, beautiful. All right, I did a bearish fib retrace, which goes from a swing low to a swing high in reverse, and I picked this level around $9.16 because we have this trading right there. We have the test around there, another test, and then once we broke through it, we started getting rejected around there, and then we went another leg lower, and that's perfectly to your 1618. So something like this is ideal. And let me look. This thing must have lost a lot. Yeah, 94, 95%, typical. I'm going to lock this in here. So I would say this is your selling climax. Now, we know that this is technically where we should have pulled back to because it's the 1618. Let me look at a bullish fib. Oh, same thing as the last chart. You see, we went to the 236 right there, got rejected, came back down. It's very similar. These altcoins all move very, very similarly. They need to get above these 236s and close 5 days or weekly candles. We have yet to. So we're going to see a pullback on this in the short term. I would look for about 350, and then we have an opportunity to get back up to around $10, which is not a lot of opportunity. Okay. So there's a couple things going on here. I like how there's a big space and structure between this right here and this. It's about 3 months. I actually like that as opposed to the Illuvium chart. Everything was so close together. This one has a lot more chart data. So Because of that, if we were to close above 1080, above the 0.5 fib, there is a chance for this to get to the golden pocket. Absolutely. There is, because there's a ton of trading at this $12 area. There's a lot of trading at 13 and 14, and the next move is 15. So there's even an opportunity for this thing to get as high as 16, 17 bucks and wicks into the 702. That would be a nice move, especially if accumulation was happening around this $4 territory. It's the same amount, 300%. So this is why I'm not interested in this stuff, because it's like the opportunities that it has, it's similar to everything else. It's why in my short-term portfolio, I said that I'm doing 5 to 7% of all the altcoins, because I don't want to get more diversified than that. I'm probably going to be selling a majority of my bag, besides my Bitcoin and ETH holdings, into this automatic rally phase. I will hold a big bag of XRP, but we'll have to see. We'll definitely have to see with that one. Again, 5 to 7% on these miscellaneous altcoins. I'm calling it my venture capital bag. I'm going to be de-risking most of that into the automatic rally, and it's to rebuild my portfolio with less than 10 holdings. So right now I'm probably holding about 13, 15 different coins. I want to reduce that below 10. I mean, getting to 8 would be amazing. Especially the fact that we're right around the corner from regulation. We have yet to have this SEC case where Ripple come to its finality. We know the Securities and Exchange Commission is continuing to fuck around with these altcoins. So it's just like the wild, wild west right now. And I'd rather have less and more in the projects that I feel more confident in, that I've done my research and that I know are here to stay. Stuff like this, it's really, really speculative, and I would not want to trust it too much, especially into the fall time, October, November, etc. But I gave you the upside targets on this pancake swap. Definitely not something that I'd be paying any attention to. Final words to say about something like AGIX. This is probably happening here and there on the meme coins. I disregard all this stuff. If you're somebody who likes to play in that market, you enjoy that type of trading, then go have fun. It's not for me. Charts like this disgust me. They all look like shit. I have no desire to be putting real hard-earned cash in them. But 2% positions in these speculative venture capital plays is fine. You know, if you want to play around with venture capital bags, 2%, 1.5%, a little goes a long way. But going all in this stuff gets dicey, because a lot of people, they never know when to sell it, and they typically wait until it goes up to FOMO in. It's another big reason why I'm not interested. So I'm going to leave it at that. Longer podcast this week. We have a lot of information in the beginning of this one for sure. The TA on Bitcoin was very thorough. I'm excited to see how the Super Bowl event plays itself out, because I believe it will share some code to how the rest of this year is going to go, especially into this October, November timeframe, but more specifically these upcoming eclipses. So I hope you guys enjoyed it. I hope you have a beautiful, beautiful rest of your weekend. Much love.